This is Precision Coach Brian giving you a introduction to how to use candlestick pivots in order for you to be able to map market structure. This is an alternative to using pullbacks to determine when new structure has been developed. So before we do anything when it comes into on the charts, the first thing I always like to do is make sure that we do an understanding of theory first. And then once we have an understanding of theory, we can easily move into the next thing, which is actually going on the charts. So let's look at this for example. All right. The first thing that we're going to do is we're just going to talk generally about market structure. So price will end up making, let me see where this thing made. Okay. So price will go in a direction. Let's say it goes up. Price comes and it pulls back and it comes down. And let's say price breaks through that last point. And we're going to say this, it does this in an iteration of 2 times. So what that means is that every time that price comes over, it is breaking through these points that are denoted by these red lines. When we do that, we tend to say that market is in what we consider an uptrend, because we'll call this first point a high. We'll call this point a higher high, and then we'll call this point also a higher high. And so generally what that means is that when you go from this high point to the next high point, that's the higher version of the last high. When you go from that point to that point, that's also a higher version of the last high. So that's why we get the term higher high. For all the points that are underneath, this point would be considered a low. This would be considered a higher low. This also would be considered a higher low. And so therefore, when you measure those points, from that low to the higher low, we've gone higher in price, but it's still the lowest point. From that higher low to that higher low, it's still a higher point, but it's still a higher lower point. So that's where we get the term higher low. Now, vice versa happens for the opposite. And when you go into consider what's considered a downtrend. So let me go over here and label this. This is our uptrend. And then over here, we're going to label this one down here as doing the same thing, but in the opposite direction. So what exactly does that mean? This would be considered the high point. This would be considered the low point. This would also be considered a high, but it's lower than the last high. So we call this a lower high. And this is also a low, but it's lower than the last low. So we call it a lower low. And then we continue on with the same thing, lower high, and then this being our lower low. All right. So same drawing these arrows from this high to this high, it's lower than the last high. That's where we get lower high. From this high to this high, it's lower than the last high. That's how we get the lower high. And from this low to this low, it's lower than the last low. We get the lower low, and we get from this low to this low, it's lower as well. So we call those lower lows. So that's an understanding of how market structure happens to work when drawing from these lines. And so what this is considered is what's called a downtrend. So now that we've got our basic understanding of market structure down, let's talk about the things that qualify for market structure as far as covering new points. And so let me go ahead and delete all these drawings that are on there. All right. So price has a couple rules that we follow, and this is generally, doesn't matter if it's in any kind of structure. So this could be for the uptrend or downtrend. I'm gonna make it a little bit more complex, but I'm gonna show you our key points. One, we're always gonna see where is the highest point. So from this point to this point, price is broken. And from this point to this point, price is broken. And then from this point to this point, price is broken the highs. So what that means is that This, for instance, would be considered our high point. This would be considered the lowest point, and then this would be considered the higher high. Well, I'm just going to call it HH for short, just to make it shorter. So the reason why is this the lowest point? Well, coming from this high, all the way from the beginning of this high to this higher high, if we just mapped out a line and watched these 2 points, this would be considered the lowest point. So for instance, there, that's what would be considered the low of market structure. Now, let's draw the same lines for the same things next. The higher high was broken over on this point right here. So what that means is that this point right here ends up becoming a higher high. Now the question is, where's the lowest point? The lowest point that we can find where price broke was somewhere here. And let me adjust this to make this a little bit easier to see. So I'm gonna adjust this line just a little bit, which means this point right here would be considered our higher low, which for short is just going to be HL. So this point right here would be our higher low that ends up showing us market structure. Price ends up coming past. Now, price ended up coming down here and making, let's see, a lower point here. So it made a lower low because it ended up coming past and breaking this point, which means this point ends up becoming a lower high because price ends up coming down here to make yet another lower low. And the reason why we know this is because price ended up breaking right here. Price ended up breaking this high right here. So now what we end up having here is our higher high because it's higher than the last low. This is going to be a higher low. And ultimately, this will be a higher high because it broke through the last, it broke through this higher high right here. But also, it broke through what used to be a previous higher high point. So, when we have moments like this, when price ends up going from a lower high to a higher high, we consider these to be changes of character, or what people firmly know as chalks. We also had a change of character when this higher low was broken by the lower low. So here we also had a change of character. So this is how we understand the changes in market structure. And so I'm gonna pull out this line and make it a little bit farther because that's our higher low line, and you'll see it was broken through. I don't know where the line disappeared. That's so weird. You'll see that it broke through our last higher low spot and create that lower low point. So essentially, this is how we see market structure on a daily basis as to what price is doing. This one isn't so relevant. So essentially, our market structures follow straight lines, but this is ultimately how we see market structure, usually when price does whatever it's going to do, and it makes it seem a little bit crazy to do. But this is essentially how we view markets and determining trend. So down here where we had the change of character, it had 2 lower lows, but it didn't have 2 lower highs. And so that didn't cause us a change directly into a downtrend. At this point, once we've had a break right here, when we have a break and when we have a change of character, the trend is unconfirmed. When we have a change, we have a change. If I could type today, that would be great. Have a change of character, and then a break of structure. Again, we have a confirmed trend. So what maintains trends are higher lows, and what maintains for uptrends, and what maintains downtrends are lower highs. So we want to see 2 consecutive lower highs and then 2 consecutive higher lows for determining a trend. So an uptrend is maintained by higher lows, and a downtrend is maintained by lower highs. Once price ends up breaking past the last higher low and making lower low, that's when we think the trend has changed differently. And when price is making a lower high, consecutive lower highs, and lower high gets broken, that's when we start thinking that trend might be changed to be an uptrend. So you have to pay attention to it. Now, you'll notice in here, I didn't mark any structure in here. All of this stuff right here is what we would call, this is what's called internal structure. So it's not the major structure or the major swing structure. Price still has to break either this high or it has to go below this low down here. So even though price ended up making it, internally it was making a break, which it did here. So here it made a break, and I'm not going to get into supply and demand in this video because I'm only going to focus on market structure, but it breaks through and it makes an internal high. It comes back, and this was an internal low, and it goes up to make both to continue on and make another high. So that's the reason why it didn't break either this swing structure higher high or this swing structure low. So I'm not looking at this structure from a major market structure perspective, but I can trade off of it from an internal market structure perspective. Same reason why I didn't look at this as well. This was a low point. This initially made our lower low from a major swing structure perspective. This became a lower high, became a lower low. And then now from a swing structure perspective, it's all aligned. So you have to pay attention to the difference in internal structure and your actual swing structure. So now that we've gotten yourself basically a primer on market structure by itself, now let's talk about our rules for whenever price breaks. So there's a couple of key things that are important to know. Every time that price breaks, for instance, a high in this high structure example, we have a couple of rules that we have to pay attention to. So here are our rules. And this will go for both points that end up breaking structure. So like right here and right here. All right, rules. Rules number 1. Candlestick body must close above the last structural high or low. So that's the first thing, the first requirement that has to be beat, which has been done. The second thing that we have to do is then we find the new structure point by evaluating the highest / lowest point, depending on which one, lowest point of a 5 candle swing. So what exactly does that 5 candle swing mean? So what it means is that, and I'm gonna draw just some quick boxes. All right, so definitely too big. Now give me a line. Perfect. Now let me do this. All right. So here's my pretty little candle. Wherever it went. Oh, there it goes. Okay. So let me combine these things real quick. Give me 1 second, guys. I'm gonna make this all pretty for y'all. Send this to the back. Okay, perfect. I don't know why I can't pick both of them at the same time. That's weird. There we go. Okay, there we go. Group number 1. Then move it. No, I'm not doing what I want to do. Huh. Okay. So definitely the chart's not letting me do what I want to do. So let me try this again. We're gonna do one square here. Do my line here. Because I'm OCD, the line has to fit in the middle. And it's not gonna do that for me. So I gotta make the box bigger. All right, so now we got this. We do this. Okay, perfect. Now let me make a couple of these. Did it do it? Yeah, okay. All right, so there goes another one. There's another group. Okay. Here goes our third one. I'm glad I'm not a Picasso, y'all. Because I cannot draw. All right, here goes our third one here. And then I'm gonna make two more on the other side. All right, so here goes our fifth candle, and then little moss. Give me one more. It's gonna be right here. Okay, perfect. So we got a little 5 candle swing. So what it means is that our highest structure point would be considered here. So this is the highest point. And the reason why I say that is because if you draw a line, you have this point that's a high, this point that's a high, this point that's a high, and this point that's a high, and you have the middle candle in the middle, that's your high right there. So if you were to draw this and just map all the highs, price made a move like this, and then price came down to here. So therefore, stop this. Therefore, this middle candle ends up being our highest point. So therefore, if we were in, like for instance, uptrend, this is where I would label the higher high. So, and then all you need to do is just flip everything for a downtrend. So it'd be the same thing, except just the opposite direction. So that's why we call these things, this would be a higher high example for the high. And then let me draw one really quickly, if I can. Hold on a second, guys, as I'm trying to make sure these lines are all lined up the right spots. But if you flip it the other way, that's just what it is for a lower low. Okay, wrong trend line. Boom, and then boom. Okay, cool. All right, so now let me take this whole group of drawings. So, hold on a second, guys, as I try to move this thing down. All right, cool. So now, let me go for this middle one. find it again. Okay. So you don't need that. Don't need that. Don't need that. Don't need that one. Don't need that one. Don't need that one. Okay. Perfect. So now, let's make it easier to move them around. That one goes there. This one goes here. And then last but not least, our middle one will go down here. So, all right, same thing, just different direction. So now, if you map all the lows, it's going to go all the way like this, and it would go like this. And remember, turn this and stop this. All right. So if you draw every lowest point, you have a low here, 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 you have a low here. So now, just like we had a higher point, we have this right here. This ends up being our lowest point. And so now we have our, what we consider our lower low. Now also, this can apply also to lower highs, and this also applies here to higher lows. So remember, we had to first make sure it breaks the market structure, the last point, and then the second thing that it has to do is then be able to make a 5 candle swing. Now, you can do this with 3 candles. You could do this with 7 candles. This could be whatever that you want it to be. So there's no really requirement, but all you have to do is just determine that within the middle of those candles, you look 2 to the left, 2 to the right if it's a 5 candle swing, and the same thing vice versa for lows. So I'm just mapping all these lows. So I use 5 candles because I used to use 3 candles, and I found that market structure changed so rapidly that I felt like there were some false signals. All things are subjective in trading, but you have to do your job to take out subjectivity. I found that the 5 candles generally put me on the right direction of market structure. So now we've covered pretty much everything from a theory perspective. Let's go look at the charts and let's go see if we can see this as well. So here we have looking at NASDAQ. And so let's talk about market structure points. All right, so I'm gonna zoom here. So what happened here? Price ends up coming, and this was a higher low. Price ends up coming and it broke this candle right here. So this candle broke it. Now, when you look to the left, there was these 2 candles. There was one low, well, this was the low point right there. And then this was a low point right there. And then this was the candle that actually broke. But if you notice to the right, it has one candle that's low, that's higher, and then all of a sudden the candle comes down here and breaks. So at this point, that can't be your new lower low point, or lower low. The lower low ends up coming down to here where it fulfills the requirements. So you have this candle here, which is the lowest point. You have this second candle that's a little bit higher on the left, and you have this candle which is higher on the left. Then on the right, you have these 2 candles that are higher. And so ultimately what that ends up happening is that it makes this one to be our lower low candle. And so now it doesn't matter how much it goes up, price has to break through on this low right here. And so what does price do? Price ends up coming down and breaks. As soon as it breaks from this low point to where it breaks, or the next market structure point really, which ends up ultimately being sufficed over here, this is the highest low point in between those 2. So that's why this becomes labeled as the lower high. So now taking a look at the market structure from that point. So let's go back. Okay, here we go. Taking a look at the market structure from that point, the market ends up coming across and making, this is the lowest point, because if you look here, price low point, another low point, barely no wick here, and then to the right it suffices. Now here's something interesting. This long wick comes down here, price makes a wick, but this wick is higher than this wick to the left. Does it matter the order? No. All that it matters is that this middle wick in the middle, or this middle candle, is lower than the two candles to the right and the two candles to the left. And it doesn't have to be in a sequential order. So even though price ends up coming kind of like this, price still never broke past this low point. So it doesn't matter specifically about the order of those candles. All you're really looking for specifically is just looking to make sure that it's the lowest point. And so that's just how price continues. Now, there are tough times like this point right here, where the market truly can come across here, it breaks, which makes this be the high, and then price comes back here, it gets broken, and then price creates new structure. And see here, it made a high point, this was lower, and then this point was lower as well. So now we have two lower points on the right, two lower points on the left, and then ultimately that candle, this high point, gets broken here, so this happens to be a higher low. So you can see a lot of movement when it comes to price, and it can change quite often in this higher low, higher high, lower low, lower high market structure markings. So that's the difference that you might find for pit pullbacks. Is that you might start seeing structure points that some people would consider structure. Ultimately, you'll probably get your direction right in the same way. But I generally found that this helps me to stay on the right side of the market. And so it's just applying those same principles and same rules over and over again. So I hope this video was helpful and informational. Please ask any questions with inside the Precision Markets Discord if there's anything else that I can cover and answer for you. But hope you'll try this out and see if it works for you. So good luck in backtesting, everyone.